Valuation of plant and machinery. So before we get into the valuation of plant and machinery, one thing we have to know is that land and buildings belong to a owner. Maybe it's a private property, maybe it's a house and some land which a private owner has, or maybe it's a company property also. But basically land and buildings belong to an owner, whereas plant and machinery belongs to a factory. Whatever are the factory is a plant, maybe the machinery which are inside the factory is actually what becomes part of plant and machinery. It may also be some agricultural tools which may be used in some cases, but mostly we say, whenever we say plant and machinery, we see that there is a factory and then there is a machinery which is associated with it. So the valuation is done on the basis of that for a particular factory. So auditor, when he makes an audit of plant and machinery, he has to make audit engagements to the factory to study and understand the functions of machinery and equipment. Auditing plant and machinery similar to land and building. Hence, these can be carried out in one audit program. In the case of plant and machinery, the auditor should call register of these assets. If register is not available, a schedule is prepared by the auditor for auditing the machinery. Purchases, invoices and receipts are properly vouched by the auditor in this regard. Similar to land, all sales and purchases should be properly accounted for and should be dealt within the accounts. Wage allocation in relation to plant direction should also be vouched by the auditor when auditing plant and machinery. So let's see what are the valuation steps which are for valuation of plant and machinery. First, audit engagements have to be made to the factory to study and understand machinery. So that is already told. Okay. Audit program needs to be planned before a factory visit. There should be an audit program. Call registers of plant and machinery assets needs to be seen or made. If register is not available, a schedule needs to be prepared. So if there is a call register of plant and machinery, the auditor should examine and inspect it. If the register is not available, a schedule needs to be prepared. Proper accounting of purchases, invoices and receipts regarding purchase of plant and machinery should be done, as well as wage allocation in relation to plant direction should be vouched and verified by the auditor. So that is regarding valuation of plant and machinery. Next, we'll take auditing of investments. So what basically is an investment? Investment may be growth investments, shares, properties, certificate of deposits, or simply a property where a company wants to expand or put a new plant in a property. So that everything is actually an investment. So while we audit the investments, what the auditor should be examining in this case. So auditor should obtain a detailed list of investments duly certified by a responsible officer from the company. It should contain details such as paid up value, book value, normal value and market value of each of the investments paid each of the investments made by the company. So what is this paid up value? So paid up value is actually money the company has received from shareholders. If the company has stocks, that is paid up value. Well, company has stocks, so paid up value is in fact money a company receives from shareholders. What is book value? Book value is the ratio of equity available for shareholders, which is again divided by total number of shares. So ratio of equity available for shareholders in that sense is book value. What is normal value? So for stocks, nominal value of shares in balance sheet. Whatever is the value given for shares in the balance sheet is normal value. And then what is market value? Market value for each investment made by the company should be included in the investment. So what is market value? Market value of shares are value of respectable or respective securities traded in a stock exchange. So whatever is the value of the securities traded in a stock exchange is the market value of each investment. So for everything, details and information should be collected by the auditor. Next, what he has to do is he has to also see list of securities should also be obtained in a similar manner. Checked securities should be kept in safe custody by a lock and key mechanism. And certificate from the bank is required in case of entrusted securities with them or in their safe custody, which was explained earlier. So these are the steps which an auditor should do while auditing of investments are done. Next, we'll take a look at verification of loose tools. So what is loose tool? Loose tool is actually any tools which have short life and low cost. Examples may be tools used in a lathe, in a workshop, in a welding or welding gun, etc. Now, certification from a responsible officer on state of affairs of loose tools is required. So, some officer, responsible officer, maybe a foreman or maybe any person who is in the workshop should certify the state of affairs of loose tools. Now, revaluation method of depreciation is applicable in the case of loose tools. So, the auditor should mention that the revaluation method of depreciation is applicable. We'll take a look at what is this method of depreciation when we visit the lecture on the depreciation. And now cost depreciation is charged to balance sheet in the case of loose tools. Cost depreciation, that is charged. So cost minus depreciation. So there is actually the cost of loose tools, and the loose tools by themselves depreciate. So that is actually the difference in cost and depreciation is taken and then it is charged to balance sheet in the case of loose tools. The difference between cost and current price is charged to profit and loss account, making sufficient provision for depreciation. So basically there are two things. One is that cost minus depreciation is charged to balance sheet, and cost minus current price is charged to profit and loss. So this is what is done. So the auditor should check all of this while he verifies loose tools. Next, we'll take a look at intangible assets, valuation of intangible assets. Valuation of intangible assets involves goodwill, patents and copyright. So we'll quickly see what is goodwill. It is actually the profitability level which is much higher for a company than normal levels enjoyed by newer and smaller concern. Smaller concern may be able to get to a profitability level at a much lower level of profitability than a big company. So whatever is the difference is actually the goodwill. Now for patent, what is a patent? Patent is an exclusive right given to a business to use, manufacture and sell a product for a certain period of time. It may be developed by a firm or obtained from an outside firm or individual. So that is patent. And then what is copyright? It's a protection enjoyed by authors to print, reprint and copy the work and distribute work. So everything needs to be audited by the auditor, and this comes under valuation of intangible assets. So this completes valuation of fixed assets. Thank you.